BNM is a statutory body which started operation on 26 January 1959. Bank Negara Malaysia is governed by the Central Bank of Malaysia Act 2009. The role of Bank Negara Malaysia is to promote monetary and financial stability. This is aimed at providing a conducive environment for the sustainable growth of the Malaysian economy. Bank Negara under Governor Jafar Hassin. He was a major player in a forex market in the late 1980s.
Monetary policy consists of the action of a central bank currency board or other regulatory committee that determine the size and rate of growth of the money supply, which in turn affect interest rate. The primary objective of central bank is to manage inflation. The second is to reduce unemployment, but only after they have controlled inflation. Next is types of monetary policy. Central banks use contractionary monetary policy to reduce inflation. They have many tools to do this. The most common are raising interest rate and selling securities through open market operations. They use expansionary monetary policy to lower unemployment and avoid recession. They lower interest rate, buy securities from member banks, and use other tools to increase liquidity. The BNM uses three monetary policy tools to control the money supply: required reserve ratio, the discount rate, and open market operation. The BNM sets required reserve ratio, which are the minimum percentage of deposit that depository institution must hold as reserve. The BNM does not change this ratio very often. The discount rate is the interest rate at which the BNM stands ready to lend reserve to commercial bank. Interest rate that BNM charge when giving up loans to commercial banks. And open market operation is the purchase or sale of government securities by the BNM system in the open market.
Monetary policy is as information indicator. For example, current expectation about future inflation may help determine how the economy will perform in later years. Determining the momentum of nominal and real economy variables, including the movements of domestic inflation, real output, export and import, foreign exchange reserves. Interest rate targets are a richer tool of monetary policy and are taken into account when dealing with variables like investment, inflation, and unemployment. Highest interest rate that can be earned tend to attract foreign investment, increasing the demand for and value of the home country currency. Lowest interest rate tend to be unattractive for foreign investment and decrease the currency relative values. Lower interest rate translates to more money available for borrowing, making consumers spend more. The more customers spend, the more the economy grows, resulting in a surge in demand for commodities, while there's not change in supply. Highest interest rate make people cautious and encourage them to save more and borrow less. As a result, the amount of money calculated in market reduces. Less money of stock would mean that consumers find it more difficult to buy goods and services.
Interest rate rise, bank charge more for business loan. This means business use more of their earning to pay interest on their loan. For example, if the bank increase the interest rate, a lot of the business may face the budget problem because of they don't have ability to pay it. The higher the interest, the less the money in customer pocket. Consequently, this can reduce their ability to buy product and service. So business may suffer from a decrease in sales. Business can invest their excess cash in interest-bearing account to make more money. During period of high interest rate, business earn more from this investment. When rates are low, business may be more likely to use their cash for new equipment and plant improvement. Interest rate also affect consumer confidence in the economy, which directly affect consumer spending. When the economy is experiencing a downturn, consumer confidence may be low, causing people to save more and spend less. For example, if the interest rate decrease, many consumers may try to spend more on expensive items such as car and house.
As a conclusion, BNM has played a significant developmental role in developing the financial system infrastructure in advancing the financial inclusion agenda. BNM do provide advice on macroeconomic policy and the management of public debt. Apart from that, BNM is also the sole authority in ensuring the national currency and in managing the country of international reserve.